Hey everybody, welcome. Hope you had a very Merry Christmas with your loved ones. My name is Matthew. Now let's take a look at a chart of some Bitcoin fees. All right, so a little update here. I have shown this chart periodically throughout the year, especially with the fee spike from April, May of this year due to the extreme popularity of inscriptions and ordinals on Bitcoin. Big picture here, as always. Let's take a look. This is the lifetime of Bitcoin and its fees. We're going to look at US dollars per transaction per day, which is not the native way to calculate fees on Bitcoin, but it still helps. And then we're also going to look at the component portion of fees versus block reward. That is, how much of each block goes to miners via fees versus the subsidy or the block reward. So if we take a look here at the last couple of years, again, major spikes in 2017 after SegWit was activated, and the 2017 bull, major spikes in 2021 with that bull. And then here we are again, midway through the next cycle. Halving is going to occur, I should say, in April or so of 2024. We see we had a spike here in April, May, as I just mentioned, and right now at the end of year 2023. So again, to put it in perspective, we are at $70 per transaction per day, $60, $70 in 2017 and 2021. Let's take a look now. Let's zoom in to 2023 and the end of the year. Here we have 2021 again. The breadth and depth of the fee spike was much longer, much higher than it has been so far. I'm not predicting that it will be shorter now, but just to show you, it's not nearly as long yet as it was in 2021, and the bull market itself caused the spike in fees. The fee spike here we had in April, May, got up to $30 per transaction per day, and it only lasted a day at that price. At that cost, I should say, to users. And then here we have zoomed in, zoom in a little bit more even until Christmas Day. Now we see that the fee spike, relatively compared to the last 2 years, is definitely high, and it's at 2-year highs, we can say. So we've gotten close to $40 mid-December, fell down a little bit, back up. $30, $40 per transaction mid-December. It's fallen down a lot around Christmas to where about $10, $13 per transaction per day on average. But of course, that can be, there's a variety of factors that go into that, and that can be a wide difference depending on how many inputs you have, how many UTXOs you're trying to destroy when you make a transaction. So this is just an average, just to give you some idea. But the real important thing, the real kicker that shows you where these fees are in relation to the block reward and where they are in relation to miner revenue is if you look at how much issuance itself is falling as a percentage of 100 per day. Okay, and not even per day, but if you look at that actually over the last trailing 12 months, that's what I'm going to show right now. So first in dollar terms, okay. What do we see here with this line? Now we're looking at the right axis. We can see here that the block reward, the block subsidy over the last 12 months, basically the end of 2022 and the first half of 2023 was about 98, 99%. 98, 99% was the block reward itself. That means fees are only 1%, and this is a rolling trailing 12-month basis. So it really gives us a perspective of what miners make as part of their revenue. And then, of course, as we're looking at trailing 12 months here, this spike that we had in April, May, started to push this down to where we were 98, 99%. We fell down to 96%. And now with this recent fee spike in November, December, again, inscriptions, ordinals, and also an increase in the Bitcoin price, we see that we are falling now here in this percentage, a trailing 12-month percentage, where issuance, that is the block reward, the subsidy, new coins that miners mine, that as a proportion of their revenue over trailing 12 months is falling to where Christmas Day we have it at just under 93% of their revenue in dollar terms, trailing 12 months, 92.9% of their revenue. Let's do it in Bitcoin terms, just to show you native Bitcoin, because remember, that's the native unit of the protocol. It's actually Satoshis. 100 million Satoshis is one Bitcoin. Let's show you native Bitcoin terms how miner revenue shakes out, issuance versus fees. Ready? There we go. Very, very close. Okay, so you can see if we look at this in dollar terms or in Bitcoin terms, it's very, very similar trajectory, where Bitcoin terms is actually a little bit higher still. Issuance is closer to 94%, whereas in dollar terms it's closer to 93%. And this is just a function of the exchange rate. All right, so 94, 93% issuance versus fees. That means fees are 6-7% roughly to miners over the trailing 12 months, which again is going to encapsulate the May spike here as well as the last couple months. How does that look historically? 93, 94% issuance versus fees. Well, let's go back again. Here we go. 2017, 2018, we bottomed at a record low of 82% in dollar terms, 86% in Bitcoin terms, trailing 12-month revenue as a proportion of issuance versus fees. So the issuance component, 82 to 86% over the trailing 12 months. And then, of course, as that fee pressure resolves, the bull market turns a little bit into a bear market. We go all the way back up to 97, 98%. And then in 2021, it was actually not as drastic of a shift. Again, when the fee pressure occurred, it only went to about 89, 90% issuance versus 10, 11% fees. And again, looking at this not on a block basis or not on a per day basis really can give us the long-term picture here. So it really shows us how bad, if we want to use that term, it got for users of the network, how difficult it got as far as fees go, and how good it got for miners to collect those fees, which again is a double-edged sword. If fees are too high, maybe people won't use the network regardless. Let's say 83, 84%, 85% in 2017, 2018, in 2021, 89, 90%. Now about 92, 93, 94% issuance versus fees. So close to the 2021 boom, not that close yet to the 2017 boom. That's where we are. We'll keep track with this. Bitcoin is being used. People need to get transactions through. They're going to pay fees if they really need to. If not, they won't. But here we can see the so-called fee market is increasing again as of Christmas Day 2023. So that's it for this one. Hope you enjoyed it. Thanks for watching.